What's up, guys? It's Oshogo right here, guys, and this is going to be a part of my YouTube channel. I'm going to be taking you guys from pro series to the advanced level of trading. Alright, now everything I'm going to be teaching you are going to be everything I place in the market, everything I do off the market, off the chart, and outside the chart in my daily life. Alright, and this series is going to be basic, technical, and psychology. Those are the three aspects of this series. Alright, and I definitely know, like I said, it's from the pro to advanced. So definitely the beginner aspect of this, I believe you guys should already know that as well. If you don't know anything about the beginner aspect of forex, you want to know about forex or anything about the basic meanings of forex and just little terms and terminologies of forex, definitely visit Baby Beeps. They will teach you in the very best way. Alright, now let's go straight to my chart and see what we have. So for the first topic we're having on the basic aspects, we're going to be discussing about trend lines. Alright, so let's go straight to my chart and see what I have to tell you guys and explain to you guys about trend lines. Alright, so let's go. That's that, guys. Welcome to my chart, and we're going to be discussing about trend lines. Guys, I want to make this video as short as possible. Alright, trend lines, good. Now, what's trend lines? Let's just put it here. Now, what's trend lines? You guys all know trend lines are lines that are used to tell us whether the price is in an uptrend, bullish, or in a downtrend, bearish. Alright, now you guys already know this, I believe. Now, what do you guys think about trend lines? Trend lines are like this. We all know a trend line that is going up like this is a what? Is an uptrend line. Is a what? Is an uptrend line. Uptrend line. Then we have what? We have what? A downtrend line. A downtrend line. Good. Now we have seen this. When the market is bullish, we draw a trend line to the upside, showing us what? An uptrend line. And there are two things uptrend line can serve as, which is what? An uptrend line can serve as a support level as well as a trend line level. Are you getting me? Uptrend line can serve as a support level, while a downtrend line can serve as a what? You guys already know, a resistance level. Very simple. So these trend lines help us to like tell us that okay, when market gets to this point, market has high possibilities or probabilities of rejecting from that point and pushing all the way to the upside for an uptrend, and pushing all the way to the downside for a downtrend. Alright, so guys, one of the things you need to consider while drawing a trend line is very simple. You need to understand that while drawing a trend line, wait guys, let's take away the trend lines for now. Okay, so you already know how to trend line, right? Let's take away the trend lines for now. Uptrend. We all know this is an uptrend. Higher highs. Uptrend consists of what? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Alright, now, and for a downtrend, we have a high, a low, a lower high, go a high, a low, a lower high, a lower low, another lower high, another lower low, like that. That's a downtrend. Alright, now for these two guys, we all know this is an uptrend and this is a what? This is a downtrend. Now definitely there are three types of market movement. We have the uptrend movement, we have the downtrend movement, and the last one is what? The consolidative movement. Now this is just a consolidative movement. In a consolidative movement, just know that a trend line is not possible. A trend line is not possible. Maybe say market comes here, create higher highs, come back, say create a lower low, then comes here, then comes here. Just know that this market is what? This market is what's consolidating. Alright. Now we have seen the three different types of market now. We have uptrend, a downtrend where you can use your trend lines. Then we have the consolidative market where the trend line cannot be used. That if you use a trend line in a consolidative market, bro, ladies and gentlemen, it's going to be invalidated. A trend line is pretty much useless in a consolidative market. Alright, so let's go back into what I'm saying here. So for a trend line to be very, very, very strong, you have to join at least in an uptrend. You have to join at least the two lowest points, the two lowest outermost points in the uptrend lines to form an uptrend movement or an uptrend line. Alright, and for a downtrend, you need to draw the two outermost highs in a downtrend to draw a trend line. Alright, so if you go into the chart right now, you see this. If you draw this, you know that this is an uptrend. We've gotten this one to join with this guy. Let's just now one thing about them. I'll get back to that. You know, you see first touch, second touch, you go a third touch. So definitely the first things you need to know about a trend line is for you to have a valid trend line, you have to have at least 2 touches of the trend line. 2 touches of the trend line. Alright. Now definitely when you see the 2 touches of the trend line, the third touch of the trend line is where you should be looking for to enter to take a trade in the market, probably to buy, and for a downtrend probably to sell. Now for a downtrend, you've got something like this. Perfect. Now there's something they call third touch of the trend line. When you draw the 2 outermost points of your trend line and they are intact, that okay, this market is what, let's say it's bullish. Let's use bullish for example. Now the third point that the market is coming to touch, that is the area you should be looking for entries with your other confirmations and your other confluences, with your other technical analysis, which I'll be discussing with you guys in other videos. You will now use it as a confluence to enter the market at the touches of the trend line. Alright, now for an uptrend, we have this first touch, we have the second touch, and now we're having this third touch. This touch area is where you'll be looking for entries. This third touch area is where you'll be looking for entries. This area is where you'll be looking for entries. Now that's not what we're discussing. I'm just discussing about trend lines here. So this is an uptrend and this is a downtrend. Very, very easy. Alright, now for a consolidated market, the lines is just going to be like straight. If you try to say, okay, let's say you just say, this market is an uptrend, higher highs, higher low. Let's say this market is on is an uptrend, draw higher highs and higher lows. You see something like this, you draw higher highs and higher lows, bro. Validated. So these are little things you need to come in confluence with. You need to make sure that okay, your trend line is actually intact, and your consolidation, you have to show that okay, market is actually consolidating at this area. Mind you, trend lines are not just meant to be used that first or second touch on a one time frame, first or second touch, and then use it and then you make entries. No, you have to go through you have to make sure that you have done your top down analysis from higher time frames down to your lower time frames, and your trend line in between. Do whatever you need with your technical analysis, and definitely you will see the best way to use your trend line. Mind you, in the market, you don't just use one time frame. You guys all know this. Don't worry, we're discussing about there are a lot of things to discuss. Don't worry, we're going to get the education started. You understand me, yeah? So that's it. We have the uptrend, we have the downtrend, and we have the consolidated market. Alright. Now you guys already know this. Yeah? We have the uptrend, we have the downtrend, and we have the consolidated market. Now for trend lines can only be useful in an uptrend and a downtrend market. Trend lines can only be useful here in an uptrend and a downtrend market. And consolidated markets can also be called ranging market. Uptrend market can also be called a bullish trend, and a downtrend market can also be called a bearish trend. Alright, now with all this put in place, we understand trend lines, we understand uptrend, we understand downtrend, as well as a consolidated or ranging market. Alright, so let me show you guys real life reality examples on the live chart. Alright, now let's go into USD. Let's see USD card. Now, example of a consolidated market on USD card. You guys can all see this. This is a consolidated market. This is a consolidated market. This is a consolidated market. No long talks. This is you can see market creating. Market came in, created higher high, equal highs, lower low, lower high, equal lows, higher high. You see, this is just consolidating. Market is not giving a clear trend here. This is just a consolidated market. The market came all the way here, push out, higher high, came back again, created a lower high. So this is a consolidated market. This is a clear face or clear case of a ranging or consolidating market. This is a consolidating market, right? This is clear consolidating what? Consolidating market. Now let me show you guys example of an uptrend or a downtrend market in the real life example, in the real life chart. All right. Okay. Now for example, now we all can see what we can see an uptrend happening at this area. This should be a beautiful uptrend. Good. Now guys, this is an example of an uptrend. This is an example of a good uptrend. This is an example of a good trend. We have the first touch, we have the second touch. Market was coming all the way to make a third touch. Now, this is something I need to teach. I'll teach you is our advanced level something. Since market didn't come into the trend line level, definitely we have Fibonacci holding it. Fibonacci holding it for me. You see? I'll teach you guys that, don't worry. But this is a good trend line. This is a this is a very good trend line to draw. Very good trend line. Alright. Let me give you guys another example of a trend line, of a good trend line. Okay. This is a ranging market. You guys can see that it's a clear ranging market. Okay, this is another example of a trend line, a bullish trend line. Guys, it's only bullish I'm showing you for now. Don't worry, I'll show you bearish. This is the perfect one. See, that's the first touch. This is the second touch. Market come all the way here to make a third touch of the trend line. You can see what the market did. It pushed all the way to the upside before it started consolidating on the way from there. You see, it's a clear case of an uptrend. Now for the downtrend, I'm actually on a bearish right now I'm bearish on USD card. So I'll show you my bearish trend. Alright, I'll show you my bearish trend. That will be the perfect example to use for you guys. My bearish trend. You see guys, you see it, guys. I'm on the bearish trend on the USD card. Alright. Now this is the first touch, this is the second touch. And market didn't come all the way to make the touch. The market has come all the way to make the touch. So guys, I'm giving you guys a secret. I'm actually looking to enter a trade here. I'm actually looking to enter a trade here. The trade is playing out for me here. Probably I should have entered the trade already, but I should be looking for entries around here. Because this is the first touch, second touch, and the touch of the trend line, just like I explained to you guys. And it's playing out well. It's playing out well, alright. Definitely I took entries around there. I made profit. Market came to all the way and it stopped me out of breaking. I'm sure you guys know the meaning of breaking. So you guys can see that. Alright. Now, with this put in place, I should be looking for entry opportunities around here because this is a clear case of third touch of the trend line. Alright. So this is little things you guys need to understand. This is I've showed you real life examples of the bearish movement, real life examples of a ranging market, and real life examples of a bullish market. Alright. So guys, if you understand this and you put it together with your top-down analysis, with your technical analysis, whatever kind of analysis you're doing, put it together, definitely you should be seeing trading quality. You should be able to trade quality setups in the market. Alright, not quantity, quality. Don't forget, quality, not quantity. Alright, let's go straight into the next one, which is to show you more examples. Yeah, that's USD card examples. Let me see if I have examples of GBP USD. Okay guys, you guys can see GBP USD. I'll show you a perfect example. Right now GBP USD, I'm actually on the trade. Market came out there, gave me profit, came into my stop loss level. Very close. Now I'm actually in profit, so I'm gonna trade here. So let's just ignore that. Let's ignore that. I'll show you guys a good example on GBP USD. Which is the weekly time frame. Now this is an option of the weekly time frame. You guys can see it. Now I need to explain something to you. Not every time the market will just touch it and react. Sometimes the market will come, break it small, show you a fake out, thinking that I want to change trend. But that's how the market works. The market doesn't just come touch it. Market may come in a bearish, let's say in a bullish market. Market may come, go and close below the trend line. Oh, definitely to come back. Just need to be calm. That's quality over quantity. You get it? Just need to be calm. So this is the first touch, second touch. See third touch of trend line. See what the market is moving all the way to go outside. Simple. Let's look for a bearish setup on GBP USD. Let's look for a bearish setup on GBP USD. Bearish setup on GBP USD. Okay. I think it's a perfect bearish setup on GBP USD. For this guy, you have the first touch, second touch. Market came all the way. I made the what? Touch of the trend. Came out, like I said, came about to close out, came back inside, consolidated into it. You can see this consolidation in this. Go to the lower time. This is a good time. Go to the lower time frames. You know that this is a what? This is a clear consolidation. Something is what I don't want to reveal too much secrets. It's like follow me, you will get a lot. You will get a lot. This is consolidation. The market came out the way. You see these pairs. This is a weekly candle, so you cannot enter on the weekly time frame. Definitely, if you go to your 4 hour in 1 hour, you see this. You just see a small bearish candle, bullish engulfing. I'll be sorry, bearish engulfing as per is a downtrend. You see a bearish engulfing. Definitely make your entries. You will make profit to the downside. You will make a lot of profit to the downside. So this is it. Very simple, very straightforward analysis. Just need to understand yourself, honestly. So that's it. I've showed you bullish, bearish. I've showed you different examples, and I think that was all for now. So on our next video, we should be discussing about support and resistance, demand and supply levels on the chart. Alright, so that's my time, and peace. And again, don't forget the USD card trade I just showed you about. You can actually look for this to look for entries around there as well. So that's my time, and peace out.